It is that time again. It's that time we check in with Mr. Dan Bird, see what is going on in the market. I want to ask him about the 10-year note ripping higher on Friday. Was it a blip or something meaningful? I want to talk about the Dow breaking down. I think it's negative 7 days in a row. And then finally, of course, we've got to talk about the Fed and Jerome Powell on Wednesday. But we should also talk about PCE on Friday. Thursday. I don't know. Sometime next week. Dan, what say you? Lots going on.
Lots going on. Yes. Yeah, the 10-year, I hadn't noticed it, but yes, it did move up 1.75%
In a single day.
in one day.
Yeah.
It gapped higher even.
Yeah. So I wanted to talk about that again. Is that something to do with just a Friday close? Is that a sign of other things? Because it moved pretty violently because the 10-year had been finally kind of boring for a while until Friday.
Well, it's been ramping up for the whole week actually. It was ramping
Okay.
up. Um, but it hasn't broken out yet.
All right. Can you
Hasn't
show that?
has
Can we kind of dig in and see what we're looking at?
Yeah, sure.
Because obviously the 10-year note, as he brings this up, really does have an influence on mortgage rates. And uh, yeah, so we'll take a look at that.
So let me make this a little bit bigger. Oops. Wow, what's that all about? Hang on.
Mm-hmm.
There we go. Okay, so here's the breakout up here.
Mm-hmm.
Hadn't gotten basically 4.5. And
Okay.
I said I think the last couple of times I said I think it's going to trade between 4 and 4.5 for a while.
Okay. All
So
right.
hasn't broken 4.5, but it did have a big move on Friday, 1 3/4.
And that looks like 3 days of actually, I guess
Yeah,
5 days in a
three
row.
days.
Yeah,
Yeah, actually the whole week. The whole week it was going up.
you're right. Okay. I see it now.
So it went from 4.2 to 4.4.
And the way that final bar is, it means it closed at the high.
That's right. Closed at the high,
Okay.
basically because the market closed,
Hmm.
or it would have gone higher.
Yeah. Okay. Well, that was
So
interesting to me.
yes, it is very interesting. Just out of curiosity, wonder what it did to TLT. Opposite
Mm-hmm.
20-year bonds
Yep.
going the other direction.
Makes sense.
It does make sense. I'm not so sure it's anything to be concerned about yet. If
No,
it,
it's just because again, I look at okay, this is why I look at this. So obviously the 10-year in the real estate world is far more important than the overnight rate. That's why I look
yes.
at this.
Hmm.
We have seen the Fed cut 75 basis points and the 10-year go up roughly 100 basis points.
Yes, that's right.
Right. So
Then they're gonna cut again next week.
exactly. So what does that mean to the 10-year? That's why Friday's move. Because again, people need to realize the bond move, the bond market has already priced in a Fed rate cut. The
Right.
98% chance as of Friday they're going to cut. The bond market priced it in long ago. In fact, you want to send the bond market for a tizzy? Have the Fed pause this month. That would
Yeah.
send it crazy.
Yeah, I don't think that's gonna happen.
No, I don't either, but I'm just saying if they did, because the market prices things in ahead of time, it would cause an immediate reaction.
Right. This is the 30-year mortgage,
Mm-hmm.
which actually went down Friday,
Hmm. Okay.
6.6% right now. So even though the 10-year went up, the 30-year went down. So what does
Okay.
that tell you?
I don't know. I think next week is important. Before we get to the Fed and PCE, we should also hit the Dow's breaking down. I saw a headline. I didn't dig in. It sounded like the Dow's had 7 negative days in a row. I do not know if that's true or if,
It's had actually, let me do this a little closer in. 1, 2, 3, 4, 5, 6, 7. Yep,
there you go.
7 in a row after trying to break out up here and couldn't. 7 in a row below its 21, still above the 50,
Okay.
but below the 21. But yeah, all the momentum is heading lower. Everything's heading lower for the Dow. The Dow is the worst performer of all
Yeah.
of them.
And if folks don't recall, the Dow is actually made up of only 30 stocks, so it's not a wide distribution.
Correct. So compared to the other ones, if we look at like, and this is something I'm going to talk about, yeah, a little bit later, but compared to the S&P is hanging in there,
Mm-hmm.
just going sideways right now.
Right.
I mean, it didn't really do much. It was kind of boring the whole week for the
Yeah.
S&P. The Nasdaq 100,
Oh, that would be the opposite direction.
yeah,
That'd be going up.
Nasdaq 100 is breaking out.
Hmm.
It's got a spinning top candle, which is often a reversal, but needs to be confirmed on Monday. So if we get a down day on Monday, then it confirms that could be the reversal right there.
Okay.
But yeah, the Nasdaq 100 just keeps going higher.
Yeah.
And then
All right. Well, I know you got a lot of stuff to share. I just want to hit this one last thing. Oh, you hit Bitcoin. What the heck? Let's hit them all.
Bitcoin just hanging in there right up there at 103 now. So it's finally maybe breaking out.
Yeah.
Of that level.
Yeah, I got to tell you, if people go back and watch our last 3 weeks, you called. I'll just summarize it. 3 weeks ago, you said Bitcoin was going to, it was at or near 100. You said it's going to 90. It got there. You then said it was going from 90. It was going to break and go to 102. It got there. Then you said it was going to go sideways for a week. It got there.
Yeah.
So you want to go 4 for 4? What does Bitcoin do next week?
I think it's still going to go sideways to up, slightly up.
Okay.
Before it finally breaks out. By the way, I'm just going to flash this. I'm not going to spend any time on it. But if people want to go to my YouTube channel, and on the 12th, which was Thursday, I did a whole section on.
Oh, nice.
On Bitcoin and the halving dates. I explained this whole thing. I explained how Bitcoin works and the whole thing back on my YouTube channel on Thursday.
Very cool. And again, Breakpoint Trading is the channel. We'll show it in a minute.
Yeah, I'll show it in a minute. But you can see what happens when they have a halving event. Usually it goes down or slightly down, which happened earlier this year. Actually, it was much more extended than previously, and then it breaks out and screams higher after that. So it probably is going to break out again and go much higher.
Nice.
Maybe up to, if you take these into consideration, it probably has a target of about 240,000.
Say that again. 240,000.
240,000.
Wow. And now, do you want to throw a time frame on that for shits and giggles?
No. because if you look at this chart, it went right here, 2016 to 2017. This is what 7 months went up 2,600%.
Yeah.
Right. Okay. And then it went from 17,000 down to 3,500.
Violent.
Right.
Yep.
So it can be extremely volatile. It can go much higher. It can go much lower too. Right here, it went from 63,000 down to 16,000. So it could go up to 120 and then come back down to 70.
Yeah.
Before it gets to 240.
But again, just to kind of go back, when you look at this chart, it's not a prediction. It's just based on the data. 240 is not out of the question, but you're not putting a time frame on it.
That's right.
Okay.
Yeah.
That's cool. All right. Well, let's get into
nothing is out of the question on Bitcoin until the federal government announces their own digital currency.
All right. Well, we won't get into that conversation.
And then it goes to zero.
Video.
Then it goes to zero.
Oh, yeah. We do not need to have that conversation. That'll be a separate video. I don't want the Bitcoin hate. So let's just strike that from the record. I want to talk about one more thing before we let you roll with what you brought, and that is next week's Fed meeting. We both said earlier in this call that we expect a 25 basis point move. I will go on record once again saying I think they should pause, but my vote doesn't matter. I don't know if you saw the predictions or forecasts for PCE, but PCE headline and PCE core are both forecasted to go up next week, but unfortunately, those are reported after the Fed meeting. So
Right.
what say you? What's going on?
Well, I think the Fed is kind of committed to one more cut.
Yeah, I agree.
I think they're probably are going. I think it'll be a huge shock and a surprise if they don't, if they pause just across the board for many things, not just
Well,
equities, but
so let's just poke
bonds.
at that a little bit. I think if they pause, it will be a sign that inflation is a bigger threat than possible, and that will reevaluate lots of things.
Yes, that's true. But the Fed knows how the base effect works too,
Mm-hmm.
and they know what's going to happen in the spring.
Yep, we've
So
talked about
they could say we're going to pause because we're concerned inflation's coming back, and then declare victory because they know what's going to happen in the spring. Or they could go
it.
ahead and cut one more because they know what's going to happen in the spring.
Well, let me be very clear. If those two options, I would take option A every day of the week. This cutting early, then getting inflation prints that go higher, it's just not a good look.
Yeah, but inflation's not going to continue going higher.
Let's
It's going to
see.
come. It's going to come
Let's
down.
see. Well, let's see. We've got a new administration with new rules and new this, new that. I certainly agree with you, and we've said it many times. The base effect says inflation's coming down, but there could be things
Well,
that happen.
just to, and I'll bring the base effect up here
Sure.
and talk about this because there's an important point to that. Where is CPI right here? This is my website for anybody that's interested, breakpointtrading.net. And in the upper right-hand corner is the YouTube link.
Yep.
And right down in this little box is the weekly newsletter, which you can get for free. But down here, this is the charts page, by the way. It's the page that I'm on. CPI headline right here. So the base effect that we're talking about is this 12-month window.
Mm-hmm.
This is just math. It's an average over 12 months. So when big ones drop off like they're going to do in the spring, now here's the catch. Assuming that there is an equal or smaller one that's added to the front end.
No, let's be clear. No, it assumes a smaller one is added in order to get inflation down.
Right.
Correct.
Then the calculation ends up with CPI lower.
Correct.
With all these big ones, you can see them all right here. 2, 3, 4 of them.
But there's no promise, and you know this, Dan. There's no promise that we couldn't have a big one in February, March, and April. You've seen commodities rip.
Yeah,
we have a new administration coming in that could do this or that.
Yes, that could still occur. Absolutely. So we may get a higher one that makes it. It's not going to make it go up dramatically, but it's not going to make it come down either. So even if it ends up being flat through these big ones here, look what comes after that.
Yeah, not good.
Right. So this one's actually deflation.
Mm-hmm.
Right there. So just pure math means if we get anything on the 12-month forward on that one, then inflation is going to look like it's going up dramatically.
Yeah, what I would tell folks is any hope for getting a CPI number below 2% has to happen between kind of February and April.
Yes, that's right.
Yeah, because after that it gets really hard.
Right. Yeah. Yeah, even after these deflationary ones, there's not really big ones after that either. So
correct.
Yeah, if it does get below 2%, it's probably gonna go back above 2 and then hang out right around 2 for a while. Mm-hmm. But again, just going back to what I just said, either whatever the Fed does, if they pause, they'll declare victory. If they do one more cut, then their hope is that there's not going to be a big one on the back end, front end.
Yeah.
And these back end ones will show it coming down. So
yeah, one more talk about the Fed before we go on to the things that you brought is one of the things that Jerome Powell has made clear is he doesn't want to surprise the market.
Mm-hmm,
so the fact that the Wall Street Journal and Fed speeches did nothing to temper the 98% chance of a rate cut means we're getting a rate cut.
Yeah, I think so.
Yeah. All right.
I think we will too. And
Yeah.
that that could that could be the difference. I'm gonna bring something up here that I should have had prepared, but I didn't. Sorry. This is Stock Traders Almanac,
Mm-hmm.
and here's their um, 21-year historical view of the market for December. All right, so these are all the indexes, and you can see the Russell, the small and mid caps, is the one that outperforms in the
Mm-hmm.
second half of December. But look where this and it shows that it's choppy through the first half, and that's what I've said. I said the first half of December is going to be pretty choppy, and it has been.
Mm-hmm.
Look what the date is when this starts to go up.
Aha. We've been there. Or that's, what is that, Wednesday?
That's Wednesday. That's Fed Day.
Okay.
So if the
All
Fed
right.
follows through and they cut another quarter point, then the market could be off to the races for the end of the year.
Yep. Could be. Not a prediction. Just could be. Looking
Not a
at the charts.
prediction, but let me. Do you have anything else before I get to
Nope.
my?
That was those things that I brought. Now let's, I know you brought a bunch of stuff, so I will just sit and watch.
Okay, let me shut down some of these things. And some very interesting things as I was updating the website. It's kind of cool because I update some stuff every day on the
Mm-hmm.
website, like right on the front page, which is the market bias page. So these are all the sectors, industries, commodities, metals, currencies, etc.
Looks
And this
like it's
puts it all
breaking down a little bit.
exactly. So this puts it all together, and some of them are counterintuitive because these green ones here, you would think that would be good, but those green ones are gas and oil.
Mm.
It means they're going up, right?
Okay. Yeah.
But overall, there's been more red ones than green ones. So it's starting to trend lower.
Hmm.
But one thing that it allows me to do is I look at every single one of these charts every week,
Right.
every day. Sorry, every single day I look at every one of these charts.
Right.
So I'm going to go through the sectors real quick. This is going to be a theme that I want to show you. I'm going to start with the last one, which is real estate. So just watch the basic trend of all of these.
Yeah, well, real estate makes sense given what we talked about the 10-year, right? The rates go up, real estate go down. Kind of
Yes,
that
right.
makes sense to me.
Yep. So I'm going to do these in reverse order because it's mostly the defensive sectors, and then the ones in the beginning are the aggressive sectors.
Understood.
So
Okay.
I want you to notice the change when we get to those last three.
Done.
So there's real estate, there's financials coming
Same
down
thing.
slightly.
Makes
It's
sense.
hanging
Yep.
in there, but I mean still on the channel, but it's coming down. In fact, it just gave a short-term sell signal right there.
Yeah,
That's where
that's the
that's where
21
that's
and
where
50.
yep, that's the 5 and the 21.
Oh, 5 and
That's
21.
that's the
Sorry.
short term. 21 and 50 is the medium term.
Got it. Oh, I
So it
got it.
just
Okay.
it just gave that signal. That was one of those red bars. Here's
Hmm.
industrials, definitely breaking down.
Yeah.
Here's
Ooh.
materials,
Yeesh.
definitely breaking down. Here's energy.
You're not making me feel warm and fuzzy.
Yeah, yeah. Just wait till the end.
Okay.
Wait till my very last one.
Wait to the
It will
punchline, huh?
it
Okay.
will blow you away. My very last thing I'm going to show you today.
Oh my goodness.
Here's healthcare.
Okay.
Here's utilities.
So
The
far, I'm sensing a theme.
most defensive. Yeah, no kidding. You can definitely see a theme with all these, can't you?
Yeah. So far.
Here's Staples. Staples is kind of hanging in there,
Let's call that sideways almost.
right?
Yeah.
Coming down a little bit, but not as much as the other ones. All right, so now let me show you the last three, the aggressive sectors, and tell me if you notice a difference, a
Okay.
change in sentiment.
Oh, jeez.
There's consumer discretionary.
Wow. That's more than Tesla. That's a rip right there.
Well,
Oof.
Amazon and Tesla is 45% of this one. But
Yeah.
yes, consumer discretionary. Here's communication services where Netflix
Wow.
and Google are located. And here's technology.
Hmm. Okay.
So
So what
you
does
said
this mean? So yeah,
right.
clearly,
What
right?
does it mean? So number one, it means that the aggressive sectors are outperforming significantly. They're
Well,
carrying the market.
let me say something different and see if
Sure.
you agree or disagree. I think this is simply saying risk on versus risk off. So risk is on. That's what this says.
Yes. Well, not only risk is on, but risk is on with the large cap tech names.
Got it. Okay.
So let's go back here to the charts page again. And at the top up here, I have something called sector tracker.
Mm-hmm.
Shows us all the sectors. So if we look at technology, it's going to show you the holdings for technology. And let's sort them by weight. So Apple 15%, Microsoft 13%, NVIDIA 13%. All right. So what's that?
41% roughly.
40,
41,
41,
42%.
42%
Yeah.
of the technology sector is just these three names.
Hmm.
All right. And they are bigger by far than most of the others. So let's look
Okay.
at let's look at communication services. Meta, almost 20%. Google has two of them, so you got to add them both up. So that's another 20. So there's 40. Netflix is 47%.
Yeah.
Again, three names, 47%. Let's look at discretionary. Amazon, 23%, Tesla, 21%.
Yeah.
Just two names make up 44%.
You know what I find is really odd about looking at all three of these? On Tesla being the exception. The big names were negative, were red in a lot of these, which means maybe
Well,
the
just for the day though.
oh, is that a day? Okay. For
Yeah.
the day.
So
Okay.
that leads me right into my next point of conversation.
Okay.
Let's go to the trend model, Magnificent Seven, and let's look at the Magnificent Seven, each of the charts. Because I did a session here in my community yesterday, and there was a guy there that said, and I kind of went through this with them, and I said, look, the big tech names are the ones that are leading. In fact, almost exclusively leading into the last couple of weeks. And the guy said, yeah, but those big tech names have been lagging. They've all been falling. I said, yes, they were, but they're not anymore.
No.
And he tried to disagree with me. He goes, no, they're all falling. They're going down. Well, they were back here. And people have recency bias, right? They remember when it was falling and they think that they're still falling.
Mm-hmm.
Well, let's look. There's Google. It doesn't look like it's falling. It's actually broken out above the high,
Yeah.
right?
I would not say that's falling.
There's Amazon. That's
Doing
not
okay.
falling.
Nope.
There's Apple.
Nope.
Doesn't look like it's falling. It's broken out.
Yep.
There's Meta. It's broken out.
Wow. 630. Sheesh.
There's Microsoft. Microsoft had been going sideways. It's breaking out now. It hasn't broken out of its previous high, but it's heading there. Now, NVIDIA is the exception. NVIDIA is going the other way.
Well, it's had a pretty nice run.
It's had a pretty good run. Yeah. Here's Tesla. Tesla has been just a monster.
Wow. Wow.
Here's Netflix.
Hmm.
So looking at all that as a whole, would you agree that it's the big cap tech stocks that are?
Oh, it has to be. But the other thing I'm left with is you can't okay, these are my words, not yours. You can't have a healthy stock market with only 7 stocks.
Yes, which, you know, it's like we talked about this ahead of time,
Oh
but
no.
we really didn't.
No.
So let's talk about breadth.
Ah, yes, that's what I'm talking about.
because that's what you're talking about. So
Yeah,
down here,
that's a concern for sure.
also on the charts page, let's look at breadth down here. First we're going to look at breadth analysis.
Mm-hmm.
This one right here. So this basically shows the advanced decline lines.
Okay. Yep.
So there's the S&P, decidedly higher. Here's the NASDAQ 100 advanced decline line.
Mm-hmm.
So I differentiate between the NASDAQ and the NASDAQ 100. I'll show you why in a minute, but this is where all of the big cap tech names are. Mm-hmm. All right. So clearly advancers outpacing decliners. New York Stock Exchange, though, is starting to break down.
Yep.
And S&P large cap, which also is made up of a lot of these, like I showed you with the weightings, right? Mm-hmm. But still, it's starting to break down too. Mid caps breaking down, small caps breaking down.
Yeah, that doesn't leave me warm and fuzzy, Mr. Bird.
So again, NASDAQ 100 is the one that's leading. So let's look at, well, first I'll show you this real quick. So I put this together a few months ago when somebody sent me an article saying, oh, this guy says that the NASDAQ advanced decline line is crashing and means the whole market's going to fall apart. So I put a chart together, of course.
When in doubt, we get a chart. I love that.
That's right. And what I discovered was all this up here kind of explains it. The NASDAQ, not the NASDAQ 100. So the NASDAQ 100 is NDX. That's the pink line up here. The NASDAQ is down here. NASDAQ's full of upstarts and industry ranging from biotech to technology, maybe huge upside potential, but there's also a risk of absolute failure. Yeah. This means for NASDAQ stocks are prone to delisting. Companies that fail are removed from the index and replaced, but their negative effect on the AD line remains.
Interesting.
That's this one down here. That's the NASDAQ, not the NASDAQ 100.
Got it.
Okay, the NASDAQ 100 is only 100 names, the biggest ones. They don't fail like all these other little biotech.
The NASDAQ's what, roughly 5,000 stocks, 5,300, or is that the S&P?
I don't know what the exact number is for the NASDAQ. I'm not sure, but there's a lot of little ones in there, and there's a calculation down here. Regardless of market cap or volume, an advance counts as +1 and a decline counts as -1. So you can't look at those articles that say that NASDAQ advanced decline line is crashing, so the market's going to go down. You have to put it in context with everything else. And if you put it next to the New York Stock Exchange and the NASDAQ 100, it's a very different story.
I just asked good old Google, and it said as of the end of 2023, there were 3,584, just for context.
Okay. Right, in the NASDAQ, right.
Yeah, okay.
All right, so let's now take a look at intermarket relationships. So if you remember back in 21, when you and I first started doing this, I made an observation that the S&P and the NASDAQ, the market was going higher after COVID. Everybody and their brother was in the stock market.
Yep.
Everyone's buying. Market was going higher until November, December. It continued to go higher. And in December, as the market hit new highs, the relationships were hitting new lows.
Yeah, the most common word from the first, 10 videos we did together, 10 discussions, was negative divergence.
Right, exactly. Negative divergence. So growth was underperforming value, and discretionary was underperforming staples.
Yep.
At the same time that the market was hitting all-time new highs in 21. So that was telling me that Wall Street was rotating out of those growth areas and rotating into defensive areas in preparation for a big market decline. Right. And a couple of weeks ago, I said, it looks like that might be happening again right now. I said, we don't know yet. Let's look at it again more towards the middle and end of December and see what it looks like. Well, here's what it looks like. NASDAQ versus the S&P. So this is December, this line right here. Here's December.
Yeah.
From just the last 2 weeks. NASDAQ clearly outperforming the S&P. Growth clearly outperforming value. Discretionary clearly outperforming staples.
So you're saying there isn't a negative divergence this time yet?
That is correct. It is not a negative divergence. Not only is it not a negative divergence, I mean, you can kind of see where I said that could be happening again before December. We just draw a line from this peak here down to this one. I said, maybe it's starting to decline again.
Yeah, I remember.
Look at this one. Maybe it is growth versus value. Maybe it is going down.
But
Well,
lo and behold, Wall Street changed, and now it's all. You know what that was?
right.
It was the election.
That's actually a big part of it. Yes, but the election was back in the beginning of November, so it's still trended down until the beginning of December. And the last couple of weeks, remember, have been choppy.
Sure.
So remember what I've been saying is that it's big cap tech stocks that are driving this. But right now, Wall Street looks like it's positioning for a big bull market next year.
Yeah, I've talked to, I don't know, a dozen CXOs over the last 2 or 3 weeks, mostly small stops, a couple of medium ones, and all of them have said in different words, we threw away our 2025 plan. We're starting over after the election.
Yeah.
Right. Tax changes, growth changes.
Right.
There's clearly a vibe shift.
Changes with energy policies.
Yep.
I mean, what is your opinion? This is just curious about your opinion. What is your opinion about, when you hear people say tariffs are going to be inflationary?
So I guess I have to answer that question one of two ways, right? So if you just ask a flat up question, if tariffs get implemented, will it be inflationary? Absolutely inflationary in the short term. However, over the long term, it should mean that we bring more manufacturing and yada yada home. So short term pain, yes. Long term pain, probably very helpful, right? We employ more Americans in other areas. But let's talk about how I think they're going to be used. I believe tariffs are going to be used as a massive threat.
Yes.
And we are going to force behavior changes.
Yes,
I agree.
I agree.
Yeah, so I believe tariffs have the potential. The threat of tariffs has a likely, and I might even say reasonably possible outcome of creating deflation.
That's possible. Yeah. Tariffs in and of themselves are not inflationary. If you just take a very simplistic view of it, if the price of a TV goes up $100, right?
Yep.
Then the person that would have bought that TV, now it's $100 more for that TV. They may not buy the TV. They may buy something else that hasn't gone up $100.
Yep. Switching costs.
But that's not. But that is not inflationary. If you look at the individual product, you could say that it's inflationary because the TV went up $100. But in the overall economy, it is not inflationary. Tariffs in and of themselves are not inflationary.
No, I mean, yeah, I mean, from somebody at their kitchen table, right? Just a regular consumer, they're going to see it as inflationary because they're going to go and see the TV is up $100, and they may be forced to not buy it, delayed. They may be forced to put it on credit, or they may buy a smaller TV, or they may buy a different brand, or. It is definitely a complex. And the other thing you didn't even mention,
probably a different brand, but yes,
exactly. I mean, there's a switch. It's very complex, but the beauty of tariffs, again, the beauty of them is, let's be clear. Let's step back. The U.S. is both an importer and an exporter, right? We do import more than we export. I don't think that's a secret to anyone. But as we are exporting goods outside, there are countries that slap significant tariffs on U.S. goods, and we don't reciprocate.
Right.
So what I believe this administration is going to do is look for opportunities to say, hey, you charge us 50% for X, Y, and Z. You know what? We're going to charge you 50% for X, Y, and Z.
Yes.
And then that threat, because again, remember, folks, we import more than we export. Example I read from Mexico. Mexico is actually our largest. We import more stuff from Mexico than any other country, including China today, right? On a gross dollar amount.
Right.
And obviously, if you haven't seen in the news, Trump threatened a 40% or 25 or whatever it was on Mexico. And the first reaction by the president of Mexico was basically like, okay. And then when you step back and realize we import something like 37% of our goods from Mexico, we export 1.7% of our goods to Mexico. So it's not even in the realm of similarities. If Mexico wants to go toe to toe to us, it won't end well.
Right.
So that's why I think tariffs are a hammer that will be threatened but rarely used.
I totally agree with that. I think they will be used, but I think it's more of a negotiating tactic than anything else. But getting back to inflation, and whenever you hear, oh, this tariff policy is going to be inflationary, at the core of it, it is not inflationary. Inflation occurs when the government prints too much money.
It is and has always been a monetary.
That's right. That's what causes inflation. Inflation occurred because, and admittedly because of COVID, but we went way overboard from COVID, and Congress used it as an excuse to push through huge budgets and put us into debt. That's what causes inflation. Tariffs don't cause inflation. Printing money causes inflation.
Agreed.
That is the key.
Yeah, what I'll say one more thing about tariffs, and again, as just a normal American looking at this, you're going to see it as inflation, and I get it. But that's why there's all these other complexities in economics of switching costs and replacement costs and delays and all of those things.
Yeah, and you're right. In the long term, it may mean that those countries producing things overseas will come over here and build a factory here and employ American workers, just like what happened with Japanese cars back in the 70s. We put tariffs on them, and they created a Honda plant in Ohio.
Yeah. A lot of quote unquote Japanese cars are made in America. So
that's right. Because of the tariffs.
Yeah, absolutely right. So I expect tariffs to be used as a negotiation ploy. I don't expect many to get adopted. The few that we do will be around probably pharmaceuticals and biotech. I think the fact that most pharmaceutical raw materials made in China is crazy, ridiculous. So I would expect, frankly, I think that's a national security risk. So I think that stuff has to happen, in my opinion.
Right.
But I think most won't.
Yep. So we'll see. I think there are some policies that he can probably implement pretty quickly, like energy policies in particular.
Oh, day one.
Right. Do that right from the beginning, and energy permeates the whole economy. So that could have an effect. So we actually could have a very bullish year next year.
Yeah, I think so.
Now,
I think it could happen.
Talking about that, and just to complete my thesis here today, something that I added to the website up here at the top of the charts page, I have index charts. I've got the aggressive sectors, the defensive sectors, but there's an index chart that I added John Carter's monthly.
I remember this. We looked at this last week. Yep.
Yeah, we looked at this last week. So this is updated for this week, and I'll update it every week. And I said last week that we're not finished with this is a monthly chart, so we're not finished with December yet. So theoretically, December could end up being dark blue. By the time we get to the end, it would have to go down a lot for that to happen. But theoretically, it could happen. But right now, these is 2021 right here. Yep. This is November and December, the 2 months when the market was hitting all new highs, both months. And yes, it rolled over the next year. But this was giving you the warning signs that was coming. Right.
Yep.
We don't see any of that right now.
Okay. There's
no signs of that right now. So I showed you the intermarket relationships are now heading higher, dramatically higher. It seems pretty clear that it's the large cap tech stocks that are driving most everything right now. So as long as they continue, then I think the bull will continue as well. but we're getting near the top down here. These are monthly charts for each of the indexes. So the S&P is, right at the line. NASDAQ 100 is right at the line. The Dow is starting to pull back now. It hit that. This line here is the 3x ATR, 3 times the average range. So that's the extreme. This dotted line, that's the extreme. Usually when it gets there, it's not going to stay there. It's going to come down. Back, reversion to the mean, which is the blue line.
Right.
All right. So that's what it looks like. So to complete this whole thesis, I want to show you something that will blow your mind. We go here, and this is stock charts, which I use all the time. Charts and tools. I'm going to look at relative rotation graphs. Remember the rotation graphs?
I do remember. Yeah. Oh, I love those.
So I did this when I was preparing the newsletter, and I was actually kind of shocked when I saw it. So first, I want to use the sectors because that's what we've been talking about. So let's use all the S&P sectors. So that's what it looks like on a weekly 1 year. Benchmark is the S&P. But let's look at it on a daily chart and look at it for 3 months and see what it looks like. Let me put a little arrow on here just to make it more dramatic.
Yeah.
So here, these are the 3 aggressive sectors, just like I showed you before, right? Technology, communication services, which are the internet stocks, and discretionary. And everything else, just like I showed in the very beginning, is way over here in the lagging quadrant.
Wow. I don't ever recall this looking this way before.
No, I've never seen it like this either. I've never seen it like this with these 3 sectors, the only ones leading, and every single one of the rest of them are lagging.
So, I mean, we've never seen it. It certainly feels, I mean, it's like the more risky stuff is on, everything else is that just money flowing out of everything and going into big tech?
That's what it looks like. Yeah,
it looks like it. Yeah.
That's exactly what it looks like to me. Can big tech continue to lead? That's the big question.
Eventually, you would think it just becomes top heavy.
You would think, but these are still these are each one of these lines are 5 days. That's what I set it at. It's 5 tail length is 5 days. It's a daily chart.
Okay.
So you can see communication services came from weakening 5 days ago and now is in leading. This one came from improving and now is in leading. They're all pointing to the upper right. So this could absolutely continue into the end of the year.
Oh, for sure. Good. Oh, yeah, of course. Yeah.
No question.
Yeah, no question.
So, I mean, that means we probably are going to have that end of year rally.
Just the Santa Claus rally.
Stock Traders Almanac said, starting on the 18th, which is Fed Day.
Yeah. Okay.
And the Fed cuts again, and the market just takes off.
Yeah, just one more thought on that. Again,
sure.
Again, if the Fed does cut, you think that chart likely holds. But you will admit that if they don't cut, that chart's not going to hold.
Yeah, if they don't cut, then I think a week we'll look at it next week.
Yeah, of course.
Next week, all of those ones that were red might be turning around and heading up the other direction.
Exactly. That's right. Good point.
Okay. This is a NASDAQ 100. This is a trend chart, long term, medium term, and short term. And I've kind of highlighted in green. So if you look at just the long term down here, so the red area is where it crossed the 0 line, went below, went negative, and then the green area is when it came back up. Right now, it is still significantly green.
Yeah. Okay.
Long term, medium term, short term, they're all of them. All of them are still up. The money flow is still going up.
Yeah. Okay.
There's nothing right now in any of this other than the imbalance of the aggressive versus defensive that says that it won't continue to be bullish. right into the end of the year.
Well, I know something for sure. You and I will be talking almost every Sunday, giving people the opportunity to watch this. I typically schedule your videos for 5 p.m. on Sunday Pacific. Show your website one more time and YouTube channel, because I know you have an event you got to get ready for.
Yeah, I'm for all my subscribers to my website, I am doing a Zoom call, interactive Zoom call. So I'm going to go through the new things on the website, and then they can just open it up, and
Yeah.
people can ask any questions they want. We'll have a back and forth discussion. I'll look at individual charts if people want to, but anybody that and I do this every month for subscribers. So if anybody wants to subscribe, it's at the bottom of the homepage. The $0 is just to register your email so you get alerted when the newsletter is out. The monthly gives a 7-day free trial that gives you almost everything, but not completely everything. Things like the risk calculator and things that you can download one time and continue to use it. They're very valuable. They're not in the monthly side. You'd have to be an annual member for that.
Perfect.
But all that's right there. But yeah, I'm going to do that in about 45 minutes. I'll start that call. And here's the YouTube channel. Anybody that's interested, just click on this button. It will take you to the, I do that every day. Just do a market recap every day, and then showing how to find good stocks, where to buy them, and then how to set stops.
Just to be clear, it's every day the market is open.
Yeah, that's right. Every day the market's open. And every day that I am available. So when I went to the money show, I couldn't do them for 2 days. Right. So some days my wife wants me to go to dinner or something, I have to do that. So
be a good husband.
Yeah.
Very cool. Well, Dan, have fun. Thank you for this. We'll talk next Sunday, and enjoy your live stream.
All right. Sounds good. Take care.
Bye.